Well, welcome back to Finance Uncut. On today's episode, the gold price will double. So before we get to the meat of the video, I thought we'd cut to a little clip from an old episode of Jeopardy, which I think you guys will all enjoy. And then we'll cut to a clip from Peter Boockvar, and I'll put a link in the description below to the full interview, which I highly recommend you guys watch. And then we'll come back and we'll have a look at some charts.
All right, let's get back into this. Eric.
All right, let's start with the gold standard for 200.
Under the gold standard, the value of this circulating money, from the Latin for to run, is linked directly to gold. Rachel.
What is currency?
That's the word.
Gold standard 400.
In 1821, Britain became the first adopter of the gold standard, dropping this metal from its bimetallic system. Del?
What is silver?
That's it.
The gold standard 600.
Advocates say the standard acts as a check on this, caused by excessive issue of paper money. Del?
What is inflation?
You are right.
Gold standard 800.
To combat the Depression, FDR moved the United States off the standard shortly after taking office in this year. Elected in 32, took office in 1933. Del, back to you.
Let's finish gold standard.
Off the standard for decades, the U.S. issues this kind of money backed by decree, Latin for let it be done. And that's fiat money.
It's all there, black and white, clear as crystal. You get nothing. You lose. Good day, sir.
So back to how we best position ourselves to deal with this problem. You mentioned gold, which, despite all the economic fundamentals indicating that there should be a rally, has been stubbornly resisting going past the 1800 level. What's keeping gold back?
So for context, you look at silver was up 42% last year. Gold was up about 25%. I think what has inhibited those two perfect inflation hedges relative to all these other commodities that have gone through the roof is this knee-jerk reaction of, okay, rates are moving higher, the Fed's going to tighten, the dollar has bounced, let me sell gold and silver. That said, now that the tapering is now here, and also the belief that, oh yeah, transitory inflation, yeah, I believe that. In fact, Bank of America had a survey of investors, and still about 2/3 of investors still think it's transitory. Well, I think as the days go on and we see more numbers, people are realizing, it's not so temporary, and that rates and gold can go up at the same time, as long as inflation is going up at the same time, because that means real rates are going to remain firmly negative. So I'm hoping that what we've seen over the past month or two of the market pricing in the Fed tightening is sort of the bottom in gold and silver. Gold and silver bottomed in December 2015, just as the Fed started raising interest rates for the first time in 7 years. Gold went up with interest rates in the 1970s. The Fed funds rate in the mid-2000s went from 1 to 5.25, and gold doubled. That now is the time for those two things to start to catch up to this whole inflation trade and everything else in the commodity space.
Do you have an outlook for gold for the next year?
Yes, higher.
Higher.
Silver as well.
I want to get a little bit more specific than that, Peter.
If you inflation adjust gold for its 1980 high, you can go to 2,500. You can overshoot to 3,000 plus.
Okay.
Silver, if you just look at a 60 times ratio, can get back to its highs of 50 plus. And name me one asset that's down 50% from its record high. I can't really think of many other than silver.
So is there a top 3 trade moves that you can advise?
I really can't find anything more compelling than gold and silver itself and the miners. The miners are very cheap. They're not getting any respect. A lot of the big ones are paying healthy dividends, trading at very low multiples relative to cash flow. When we think about the good mining companies that have all-in sustainable cost of $800, even $900, and they can sell gold at $1,800, and that's a pretty large profit margin that these companies haven't had in a while. They're much better run, and if I if I am right on the price going higher, while those costs may go up because they're feeling the same sort of cost pressures that everyone else is, the price of gold will be going up much faster, and those profit margins can expand even further.
But in this stagflationary environment, do you see the industrial use of silver take a hit, for example, and how would that impact the demand for miners and for the physical metal itself?
Well, with silver going into solar panels, going into batteries, electric vehicles, I think that the secular trend in that demand in electronics and anything tech is pretty unstoppable.
Does the chip supply shortage, which is used in a lot of the same electronic devices that silver is used for, impact the industrial demand for silver to such a degree that would impact your prognosis on buying silver and silver miners?
It could. I mean, half the demand for silver is industrial. About half of the rest is monetary and coins, and the rest jewelry and tableware. So yeah, it could have some effect, but the action in silver doesn't necessarily trade off the industrial uses. It really trades off gold, real rates, the dollar, and you can just see that relationship over the past year. So I think if gold gets going for the reasons I stated, silver is going to follow gold.
So I've never shared this chart before. I got this chart from Joseph Wang, who used to be a New York Fed trader and actually did quantitative easing. And because he said you've got to look at where the new currency units are actually going. So when you, instead of just looking at the financial institution and hedge funds, which those dollars are likely to go into financial assets, when you look at this chart, which is households and non-profit organizations, checkable deposits, this is mums and dads. This is likely to be currency units that are going to be circulating in the economy, chasing goods and services. And so, you know, when you look at, yeah, and then this is the Austrian position. Yes, you look at the currency supply or inflation, the expansion of the currency supply, but also the demand for that currency or the supply or production of goods. So you can have inflation without having price increases if you are able to increase the number of goods that currency is chasing at the same level. Or you can actually have prices going down with inflation if your production or supply of goods outweighs the demand for that new currency. So yeah, there's a difference between monetarists or the Chicago school, which focuses solely on the currency supply, and a lot of modern economists try to muddy the waters between Austrians and monetarists. But so when you have a look at this, you actually have a look at, you know, the new currency units being created in the last 12 to 18 months. And you can see that there's a huge spike. And at the same time, we've got supply chain issues and we've shut down the global economy and reopening, but we're wondering why we've got these scars in the economy and why I believe that we're going to have an inflationary decade ahead. Sure, with bouts, you know, nothing goes straight up in a line. Sure, we'll get bouts of, you know, disinflation and then rocket back up once again. So now I wanted to share this chart from Kitco Research. You can see gold there at 44%, Bitcoin, NASDAQ, S&P 500, and, well, who cares about bonds, right? Interesting, commodities index is there. The commodity index has done all right in the last little while. Now, what's this mystery sector? So this is a sector that I have actually started investing into in recent times. You know what? What I might do is not actually tell you what this mystery sector is. I'd love to see your thoughts in the comments below. What do you guys think is this mystery sector? Now, I've done videos on the BS that is this whole global warming movement and ESG, and, you know, basically what, you know, I can't say too much, but you guys get the drift from my videos and how I've invested in fossil fuels. But I've also invested in hydrogen companies, by the way, which don't work, but thanks taxpayers for the dollars there. Those positions have done very well. Now, what is this mystery sector? I'll do another video in the near future about this mystery sector, but what do you guys think this mystery sector is? Put your thoughts in the comments below. I'd love to see if you guys know. And here's the latest US Mint gold coin sales chart that I could find for you. So October 31, so it's the most recent. And look, you can see that 2018, 19, not a lot of people were buying gold. I was. But you can see in the last 2 years that the coin sales have definitely gone up and a lot more consistent too. But I've said this in other videos. What I believe drives gold and drives silver is the institutional investors. And we saw that last year. Institutional investors jumped into gold and silver. And we saw the massive rise, the massive jump in both gold and silver. And then we saw institutions jumping out and going into risk-on assets. That's the facts. You know, whether we like it or not, that's the facts. And some of them went into Bitcoin. A lot of them went into the FANG stocks and into these other risk-on assets. And that's the truth. However, as I've also shared in other videos, that the institutions, institutional investors, have been taking profits off the table on risk on. They're not now starting to believe that inflation isn't transitory, and that we are going to see more tapering, interest rate rises. And I know you guys are thinking, but interest rates that rising will be bad for gold and silver. Well, hang on, because I'm going to do a video. I don't know if it's going to be the next one, but I've got a video coming up where I'm going to show you guys that I actually believe that interest rates rising will be the best thing for gold and silver. And that is when I believe we will see gold and silver really run up quite hard. So stay tuned for that one. That's coming out soon. But yeah, keep an eye on this. We're going to see financial institutions or institutional investors, start to move back into this risk-off, safe haven type assets, because they're now starting to see things are looking a little shaky. That the good times, we've had a big sugar hit in risk-on assets. So that is what's going to drive the market. Now, I like to prepare before that happens. So when things are smashed down, when we saw silver fall down to $22, I know some institutional investors actually started buying at that level. So those of you that are saying silver's dead, it's gone, blah blah blah. Well, I disagree. And if you guys want to sell your silver, want to sell your gold, hit me up. I'll buy it off yous, because I'm preparing and getting positioned before everybody else jumps in. And anyway, that's just my opinion. What do you guys think? Love to see your thoughts and opinions in the comments below. If you like this video, hit that like button. Really do appreciate it. Take care, guys, and I'll see you again on another episode of Finance Uncut.